Feel that? That's the beat of global markets, the rhythm of the world. For most, the cadence of today. To us, the pace of tomorrow. It's people and machines uncovering opportunity. Cloud computing providing endless capacity. Blockchain making transactions safer and faster. New markets born where they weren't before. With ingenuity, technologies, and markets expertise, we create the possible. And when you do that, you don't chase the pace of tomorrow. You set it. Nasdaq. Rewrite tomorrow.
All right. So that was cool, but it doesn't really explain why I'm here. In order to go through that, I think I'm going to have to explain a little bit more about what Nasdaq is, because I think a lot of people don't fully appreciate the breadth of what we do. Most people know Nasdaq as a stock market that's based in New York. And they'll know us as the place where a large number of technology companies are listed, like Apple, Microsoft, Amazon, Google. What a lot of people don't recognize is that we're more than one marketplace. There's actually about 30 marketplaces around the world that we own and operate. Critically, we also provide the technology that each of these runs on. So we build it in-house, we deliver it, and we operate these markets. But still, that's just a fraction of what Nasdaq does. The fastest growing part of what Nasdaq does is taking the technology from these marketplaces and delivering it to a much wider range of marketplaces globally that we don't own and don't operate. So there's about 115 marketplaces around the world that rely on our technology for everything that they do, or a lot of what they do. There's also a broader range of what those marketplaces trade than most people might imagine. So, for example, in Tokyo, we provide our technology to JPX Group. This is the largest exchange group in Japan, and they use a lot of our software for their core trading functions. In Sao Paulo, and in about 40 other places, we provide our market surveillance software. This is a software that takes a look within electronic marketplaces, of which all of these are, and hunts for patterns and detects nefarious activity, market manipulation, insider trading, and so on, violations of the rules and regulations of the markets. It's all about high volumes of data, high volumes of trading, and detecting what goes on that the human eye never could see. We provide clearing in Riyadh to the Saudi clearinghouse. Clearing is a critical function, particularly in derivatives markets where prices are very volatile. It allows counterparties to trade with each other anonymously. You don't need to worry about who you've traded with when you have a clearinghouse that stands in between you and them, guaranteeing the trade. And a lot of what our software does is takes deposits from these members, calculates the risk, and constantly adjusts the amount that these people have to have on deposit using those risk models. It provides for a safer, better market experience when you don't have to worry about default, when you know that your trade is almost certainly good. In Johannesburg, we provide an e-voting solution to the South African Central Securities Depository. This is a blockchain-based proxy voting solution where we can offer a range of information, transparency, voting, and even the appointment of proxies for the voting, all on a blockchain in an immutable, auditable way. In Bermuda, we work with a new form of reinsurer. They take exotic and extraordinary risks, they slice them and dice them into small pieces, and then issue them out to the markets so that instead of a reinsurer providing your protection, you've got a range of investors that do it. They essentially disintermediate part of that value chain, providing a much better value to their customers. And it's our software that allows those pieces of each policy, those instruments, to trade. And you're not just buying them, you can then retrade them. There's a liquid market. And then my favorite example in Hong Kong, where we do provide much of the mission-critical software to the exchange and clearinghouse there. We also have a big customer, the Hong Kong Jockey Club. For those that aren't familiar with the Hong Kong Jockey Club, they are probably the world's premier horse racing operator. They have more money bet through them on horse racing in a year than the entire US, and that's for only 7 million people. They're Hong Kong's largest taxpayer and Asia's largest charitable donor. And they run what looks to us a lot like a market. So our technology there, we do the slicing and dicing to create new and interesting betting products. We take a look at every possible permutation of the finishing order of a horse race, and then we create synthetic versions of traditional products and new products so that the betting menu can be broadened without cannibalizing the liquidity that existed before. So the key message being from all of these examples that we are seeing technology disrupt industries well beyond our own in ways that it never has before. It's bringing buyer and seller together in new ways. It's facilitating price discovery in new ways. And it's letting people track what's going on in these transactional ecosystems in new ways. And we are aiming to be at the forefront of that. So we've been looking at a range of other industries as aspirational opportunities to get more involved. And we've seen a number of trends in these industries. So I'll take you through a couple of them. So gaming and wagering, I obviously mentioned horse racing on the previous slide, but if you think about gaming and wagering, it's a much broader industry than that. You've got online sports betting, you've got lotteries, you've got heavily transactional businesses that have moved from a sort of retail world to an online world. They're dealing with data volumes and transactional volumes and patterns to be looked for and new regulation that they haven't encountered before. To us, this looks like not a marketplace, but close. It's got a lot of the characteristics that a marketplace would have. Digital assets. We're seeing a rise in cryptocurrencies, but also in tokenized marketplaces where assets that previously were not easily tradable can now be tokenized and traded on a market and then settled on a blockchain. We provide software to almost a dozen of these marketplaces, and we see this trend growing. Advertising. Now we're getting even further afield from some of these other examples. To put it into context, we are seeing advertising exchanges that look more and more like the exchanges in our industry than we ever have before. We provide software to a digital advertising futures market, but maybe even more interesting and further afield is the audit trail function that you see within exchanges, within marketplaces, to track everything that goes on. We're seeing use for that, and particularly for the latest generation of what we've built that tracks everything on a blockchain, we're seeing uses for that in tracking a lot of the mobile and web advertising that you confront on a daily basis, for tracking opt-ins to be tracked, for tracking whether or not ads are delivered to real people instead of fraudulent groups. This is a really interesting use case where you see a function of a market or a characteristic of a market in a place that doesn't otherwise operate like a market. Insurance, I mentioned a reinsurance example earlier, but if you think about insurance marketplaces otherwise, clearing and settlement, a lot of the post-trade functions that you see in the capital markets, they're relevant here. And booking platforms. A lot of us booked a hotel room to be here this week. We might have booked a flight as well. This is, to us, like an early stage of a marketplace. You can book something, you can follow through with it, you can cancel it. But from our standpoint, as this evolves, you could eventually come to retrade it. why shouldn't that booking be an asset that could be sold to someone else? You avoid cancellation, it's healthier for the ecosystem, and it adds value to what people are buying. And just walking around outside here and looking at a lot of the booths, I see a lot of booking, but not as much in the way of a secondary market around those things. And then obviously this industry, transportation and logistics. We're talking to a number of companies in this space. I'm going to put up some really high-level use cases and concepts. I think these will in time become relevant. Many of them already are. So trading freight capacity, a spot market essentially for booking passage on a short-term basis for goods. Similar to the booking example, but as we would envision it with rebooking, secondary markets, with an ability to make a mistake and sell what you've booked rather than defaulting. Contract trading platforms. This concept is more related to a longer-term market. Maybe a request for quote model works well here, where you're looking to book a ship for 6 months. You don't need it until August. You don't know what day in August you need it, and you don't really know what kind of ship. You could, in theory, post an order that becomes an instrument in a marketplace, execute a trade, a binding term sheet of sorts based on high-level details, and then later on, as the time grows closer, you could essentially narrow the discrepancies, the finer details. So what day in August do I need that boat? What kind of boat do I need? We would think of this as the post-trade function. And the idea then is keeping track of such things in a careful enough way that you avoid disputes. And if there are multiple parties involved, again, some of the blockchain research that we do and others do seems particularly relevant. And then last, as an example, price prediction tools. In financial markets, a lot of people are implementing more and more data science techniques to value various assets. Alternative data is a really interesting concept now on Wall Street. An example being you have hedge funds trying to estimate when mergers and acquisitions will occur based on tracking private jet movements. So we've got a subsidiary that's got a range of these alternative forms of data, selling them to the market. But when you take this alternative data that maybe previously people weren't mining for the sorts of signals that would be helpful in predicting demand in the logistics industry, and you combine them with publicly available data, and you combine them with proprietary data if you're a large operator that's got really useful data yourselves, and then you combine them further with machine learning techniques, we think that you can find a lot of new signals and a lot of better predictive models to advance the business that this industry and many others are in. So all high-level concepts, lessons generally from the markets, none of them full-blown markets in the same way we think about the Nasdaq, but all of them becoming more and more relevant with technology. So, in conclusion, technology is disrupting this and other industries in many, many ways. It's bringing buyer and seller together in new ways. It's providing opportunities to avoid disputes and defaults in new ways. It's not happening as quickly as some might think. It's certainly not where this industry will look like the Nasdaq in 2 years, but there are steps along this journey that are worth paying attention to. And we think that the companies that pay attention and that try to embrace and harness the market forces, we think that those will be the winners in a few years' time. So, thank you.